Hello and welcome everyone to the weekly Delphian meeting. Glad to be back off of a week of vacation. So today we're going to go through a market update, and Shawn's going to talk about some earnings stuff, and then I think Joe has a few things he wants to talk about. So that's kind of the agenda right now. I did want to let you know that we're tentatively going to have Ashok on the call next week, so he can go through and, it's been a long time since he's been on here, so he's been very busy, but we're trying to get him in for next week to talk to the group. So hopefully that he'll be able to make that work with his schedule, but right now it's looking like he'll be here next week, so don't miss next week, right? All right, so let's get started. So obviously a lot going on with Market Pulse. We've been staring at this being really high and overbought for a long time. So now we're down to 25% in state one. That is not overbought by any stretch of the imagination. So it's been very interesting. The state eights have popped up quite a bit, and just like the overall, you can see the red bars are really big here. I mean, 70% are in a bearish state right now compared to like 28. So very interesting. We'll dive into the market pulse in a second. We only have one index in a bearish state right now. That's Russell in 2. The other ones they're still holding in state 1. So we'll run through all of that here shortly. So for market pulse, so we were overbought from November until I would say about right in here. So about a month ago we're right on the borderline, and now we dropped all the way down to 25. Getting a little bit of pickup in state eights, so we're up in the teens now. What I really like to look at is these new lows. So we did have a really good spike here, so that's somewhat concerning overall. I would say if it stays elevated, then we would expect another big spike. By elevated, I mean like in the hundreds, and doesn't drop down to this flat line level. So if we stay elevated, it could pop back up there. Just be careful about that. A lot of not a lot in state 1. The market still is very resilient, and we're losing breath as we've been talking about for a very long time. So just a few of these seem to be holding up the market, and so that's kind of the rundown on the market pulse here. So let me look at the state modeling. So state 1, we're still well above for SPX. We're well above that target 3 still. So we don't get much data from this chart here. What we do like to look at, and hopefully you guys were all watching this, on Monday it touched the 50-day and it just bounced off of that, like we've been talking about for a very long time. So that is still holding true. It's been our marker here for the overall market direction for a long time. It's held up very strong, and once again it tested it on Monday and popped back above. So this is really something to watch. Continue to watch. Hopefully you guys were tracking that earlier this week. So nice bounce off of there. We'll see. Just continue to watch that level there on the 50-day SMA on SPX. So that is the key, as we've been preaching for a long time here. So So let's go into, let's do NDX first. So NDX got up, still in state one, ran up to that target 3, and it's kind of been choppy up and down above that. So, tried to get up there one day, then, failed, came back down, ran back up, came back down, and I think we're right around 750. So we're pretty much right on that right now. So this seems to be acting like a pretty strong resistance. So that's another kind of key level I'd watch, at least for the NDX. So, we track the SPX on the 50-day and then, see if we can get above this, or if this really is going to be like a strong resistance level for NDX. So that's what I'd watch there. Let's talk about the Russell. Russell is in state 2. Background. All right, sorry, someone was background. So this went into state 2, and the typical move for state 2, it's not really. Oops, sorry. Is not, didn't do the exact move, but typically it'll run here and go down, hit that target, and then kind of bounce back up. So, this one it obviously diverted, went up here first, but eventually ran down. And, our favorite trade for the studies is, state 2 hits target 3, right? So it hit target 3 on Friday. You had one day lower, and then you had to bounce back. So still intact. I know a lot of those trades that we had set up for people, those state 2 target 3 trades, were triggering if you guys set up those alerts. So and the same with that IWM or the 5-day drop, that trade also triggered if you set that up in your system. So you should be seeing those in your daily alerts. And it's just nice to have them there because you don't really track them, and then they pop up all of a sudden like, oh yeah, that's a great trade. You don't want to have to track it every day, and that's what the system does for you. Set them up there. They'll give you those trades every day. And obviously, we also have had a lot of studies popping in the past few days. I think the day before there was like 95 or something total trades. I think Joe counted them all. So there was a lot of trades in there to filter through and pick the ones that you like. So as far as the Russell here, obviously we had a nice bounce. So I would just say until we get, it looks like we're going to be a little range bound here. So just kind of check that, see if we can get outside of this range. I think we're right around entry price right now. So, went up and then went down, and now we're back to basically that entry price right around there, I think, today. So kind of look for those levels and see which way, it's going to break out. Overall, obviously watch, I think the most important thing to watch is that 50-day SMA for the SPX. And then, I'd look at NDX and then this one kind of to see where it's going. It kind of looks like it's building like a range bound type thing. That's my initial guess here. But, if we look longer term on this chart, in February, we're pretty much in a channel here. So I think that's a good thing to look long term. Can this break out of, sorry, my lines aren't exactly straight, but is it going to break out of this channel here? And that'll be another, I think, long-term type indicator to watch here. And we're kind of near that lower end of it, so that's something you can watch on the downside too. So but I don't see anything until this gets out of this channel. I wouldn't, I don't expect much movement, just kind of back and forth on here. So I think that's it for market update. Any questions or comments from the gallery?
Josh, I have a question for you. You spoke about being overbought especially in the state ones from November till about June. Could you just, review for everybody kind of how you view overbought in that, in that capacity?
Yeah, so what we did like a long-term kind of tracking, just going back really far and kind of look at previous peaks and basically for the market, like once it gets up around 45, and this is kind of like a ballpark, but what we noticed looking in a very long time period. So if it gets up around 45, that's usually a pretty strong indicator of being overbought for the market overall. Now things can keep running after that. Obviously they did here, but you can see like this little top was a 45. So that it's not necessarily like the market's going to crash once it gets over there, but it's just like the strong bullish movements, kind of like this, are for the most part done, and then over 45 you can get that kind of slow creep higher. But like these kind of big moves, we need to be like have lower state ones to get like a big ramp up. So we just did a historical analysis and came up with pretty much like that 45's our best level for like overbought overall.
Okay, great. Thanks for reviewing that. Appreciate it.
Sure.
Hey, Josh.
Yep.
Is there, do you look at it as maybe the converse of that being an oversold market?
I haven't been able to pick anything out like that. Usually like when you have these big corrections, it's very fast and like deep like movements, like this here, like you see how high they get up. So like there's all different levels for that. Obviously if you have if I was I don't have a specific number. Obviously, if you have state ones at 2%, it's it's oversold. But that's something we can look into. As far as like an analysis historical. So I don't have that number.
Okay, I didn't know if you look at it or not. Just curious. Thank you.
Yeah, we definitely look at it. I haven't figured anything out. Like the tops, the overbought was a lot clearer. So I think the team can that's a good point to bring up. We do have the level for overbought, but we don't have one for oversold. So we'll do some analysis. But that's a great point to bring up.
Hey, Josh. This is Dave. Yeah, and good luck on trying to model that. And it's like, I appreciate all the work you guys try to do to figure out how some of these to predict some of these things, but it's a real challenge. I did want to make a comment. I didn't notice a whole lot of comments on where people's fears of either a breakout or a breakdown on maybe some of these, what might cause that for some of these various industries. But one thing an observation that I'm making is that this is kind of like a similar story to the last earnings cycle when it comes to the NASDAQ and the Qs specifically. There was a worry back then about valuations, and there was a kind of a change in direction on the week that most of the, if you will, quote unquote, FANG stocks or whatever stock you think fits into that category reported. They all report just about the same time. This year, it's for this cycle, it's the last week of July, so it's not next week, it's the week after. So I've noticed that the setup is similar to what it was back then. Our valuation's too high. Where do we put our money? Where there's a lot of still unknowns. But when those companies reported that week, there seemed to be a pretty definite midterm, short-term trend of change that kind of followed suit. So don't know whether you can model that or whether it's worth modeling, but it might be worth just keeping an eye out on stocks in the NASDAQ and the Qs, what happens after that week, the last week of the month. Just
Yeah.
saying.
Yeah, that's a good point. I mean, a lot of those are big drivers for the indexes, like NDX and SPX, or, those big symbols are, they drive those indexes more than, other smaller ones. So, and, a lot of things usually follow suit, like depending on how they do. So that's a good point. Yeah, it's definitely some important earnings coming up. So I don't know, Shawn, is there something you can look at for that, for the earnings? I know you do most of the earnings stuff.
For the actual changing of the announcements or the dates?
No, what Dave was talking about, just as far as like the
valuations.
Yeah, the market direction, basically after, these big companies report, like, is that start a trend or not? Depending on how,
We could try to look at it and model it once we put them in there and see if we can follow the trend. But it seems like Dave is somewhat accurate, with what his statement from what I'd seen last quarter and almost what's kind of playing out now, that the earnings are fairly good. And then the sector or the individual holding is kind of coming down, even though the earnings are pretty fair. And that might be a little bit of the shaky outlook that everybody's looking at now with the Delta variant and things like that. But yeah, it'd be interesting to see if we could track it somehow. But I'm not sure exactly.
Okay, we'll look at it, Dave.
I would just say to look at a price chart of the index around that, around that time frame, that earnings week, and see what happens after that, like the first week of August compared to the last week of July, and see if that's the. I think Joe was kind of hinting at this at one point too, as being I won't say override, but potentially rollover points. And that's kind of what we were discussing last week, is what could be a rollover or a breakout kind of event for different indices that react differently to, things like inflation or valuations or, et cetera.
Right.
COVID is the driver on what they call the breakout or opening trades. Seems to be when there's talk about the COVID, the opening trades all take a dip when there's discussions about it.
Yeah, it's funny we're still talking about reopening trades. It's been over a year. So I'm not sure, like the variants. My understanding of, my basic medical understanding is that usually, when these viruses mutate, they get weaker. So it's kind of strange that you're talking about the Delta variant being stronger, but usually everything I've read, the mutations are weaker forms than the original. So I'm not sure. So Dave, you had, I guess asked about, like the impetus for the next market correction. What were your thoughts? You there, Dave?
Yeah, sorry, I was stuck on mute. I'm stuck muting myself or not being able to unmute myself. Well, but that's kind of it. It's like I don't, it's sometimes you don't predict ups or downs, but you can sort of predict volatility around events or timing of things or ranges of things. So I was just using the range of earnings within a particular week as something to look at. The Russell's been range bound, and as far as predicting maybe a turnaround or a break upward, I think that is all going to depend upon like the infrastructure bill and if it gets passed and when it gets passed, or if and when it gets passed ever. Then I think there's a possibility for stocks in the Russell to advance at a kind of break out of their range boundness, but I don't know what that could be with the S&P. I mean, it's already up there. I can only see it rolling over for whatever reason that,
Yeah.
might become more apparent than we already are hearing about. So who knows when that might be.
Yeah. Well, what I talked about in the past was, inflation. I think that could be one thing that really causes a market downturn. Because if we get really strong inflation, the Fed will have to act. And we all remember last time they raised rates, the market really turned over bad. So, the Fed, and thanks Sudhir for sending a video. It's very interesting. As far as the Fed, I thought it was also interesting that they didn't talk about, when they raised rates in the fall of 18. They kind of left that out of the documentary, but the Fed's in a tight spot here because if we do get inflation, they have to act. Any hint of raising rates, it's going to get ugly for the market. That's my opinion. Outside of that, any kind of political, weird stuff going on. The election, that's still hasn't died down. These audits and things. So I think there's quite a few things out there just to, keep our eye on. Until that 50 days crossed, it's hard to bet against it,
Yeah,
I
I
have
think
one that might not be obvious.
What's that?
I have one that might not be obvious.
Yeah, sure.
If they cancel the Olympics,
Oh, you think?
there's already news reports that there's people talking because of the rise of COVID in the Olympic Village.
Mm-hmm.
And Japan is still locked down in many areas, and they weren't allowing spectators into the Olympics anyway, right?
Mm-hmm.
Just TV, press and stuff. And as it gets closer, if the COVID cases rise and they say, all right, we're just going to cancel it, because they already suggested it in a news report.
Mm-hmm.
That could, panic the markets.
So, yeah, I definitely didn't think about that. Yeah, I'm not sure.
Yes.
Go ahead.
Yeah, Sudhir, I think that's a really good point. It's been the discussions have been getting more and more, let's say critical, or the possibility of not having them is increasing slowly but surely, but it's getting pretty close. So we'll see. In line with that, if mask wearing comes back in more than just one or two cities, I think that also could be more people will be paying attention to the variant, Delta variant, if that happens. And then I can see, LA already announced, return to mask wearing for indoor everythings, I think. So if that becomes more of a trend, and just one or two cities, I think that could also be a mark of watch out for a downturn kind of thing.
Yeah. Yeah. I mean, if we have a big spike in deaths and it comes back, strong in the fall or something, yeah, obviously that could spook the markets pretty good, I think.
And what I was reading
Mhm.
was that on Monday, when we had that dip, what I was reading caused that was that the COVID deaths were coming back and people got scared about COVID. Now, I don't know if you all read that, but that's just what I saw.
And I agree. And I think what's also concerning is that now they're finding more and more people who have been vaccinated are coming down with COVID, and some of them are ending up in the hospital. So if we have that, if more and more of that happens, and if it starts, children are ending up in the hospital on ventilators. So if there's a problem with the schools, I think that's going to be a major interruption.
Oh, yeah. 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 If it starts affecting children, us parents will go crazy. That'll be mayhem because the kids really didn't, at least the first round were really affected. Their immunes are so strong that, if they start getting affected, I think it'll be mayhem.
Yeah. So.
Okay. Well, thanks for bringing that up, Dave. Any other questions, comments before Shawn starts off here?
Shawn, or Josh, just one comment then, with regards to, the reasons why, and it sure seems like, COVID, if things got worse, could be a trigger. And I go back to just the speed with which the markets trade. I mean, it's pretty remarkable. I've said before, I think that's really the only thing that's changed over the last few decades is how fast the market moves. And with that in mind, I would just mention again, the virtual portfolio tool that we have. Try to be cognizant, hopefully you're downloading your trades, but be cognizant of that delta Greek, because it'll give you a good idea, down 5, 10, 15% with your various trades, what your exposure is. So I would just encourage folks to take a look at that, mess around with it, because chances are when the next sell-off comes, it's going to be lightning quick.
Yeah, they definitely move fast. We know that. So it's a good point, Joe.
Yep.
Okay. Shawn, you ready?
Yeah, ready to go.
All right. Let's take it away.
All right. So yeah, thanks for joining, guys. And yeah, glad to have Josh back, I'm sure, to go over the market update with everybody. Mine was fair, but not as good as Josh's, it doesn't seem, in my opinion. But yeah, I want to show you guys some of the earnings stuff. And then while Josh was talking about, a couple companies kind of holding up some of these indices or some of these ETFs, and I think somebody had mentioned it, maybe Dave or somebody else mentioned it last week as well. I want to show you, just kind of the basic screener tool within the platform where you can maybe do a little more in-depth research on that particular topic, just so you're in there using that different functionality of the platform. We also have, today's point regarding the earnings and, possibly the surprises or the lack thereof based on those earnings announcements. We have some data that we're pulling out to be able to send to everybody regarding, our earnings trades and earnings information to try to give you a heads up on the earnings as they're coming out. And that's one of the key metrics that we were able to put in there are, the previous earnings announcement, EPS plus the surprise, and what the expected is to be for this next earnings announcement. So that might be some data that, somehow we could compile together and maybe run some type of test to see if we could find, a correlation or a shift in those EPSs, and that might in turn help us look at an ETF or an index and maybe do a further analysis on it. Just a thought after, that comment a little bit earlier. So I do want to show you guys the earnings stuff. So I know Sid here had traded a trade last night, Johnson & Johnson. I traded it as well on the volatility crush. But I do want to get the thoughts of if anybody's noticed on our pre-alerts. We do have a difference in some of these columns. So as everybody knows, Josh, Joe, and myself are working tirelessly to make some.
Are you supposed to be sharing?
I am. I keep messing that up. So, yep, here we go.
Yeah, we just have a blank screen.
I get ahead of myself, I guess. I did that last week too. I'm sorry. So now you should be able to see the pre-alert, right?
Yeah, now we see it.
All right,
Got it.
cool. Yeah, and Gail sent a message too. Sorry about that, guys. Yeah, click on it and then I just don't hit share. So I apologize. But yeah, Joe, Josh, and I, been working on doing some changes to the platform, just trying to change some columns, make things a little bit easier to read and a little more useful to the users, yourselves, plus us as well. And so on the pre-alerts, these columns, we've kind of added some, changed some, rearranged them a little bit. So has anybody noticed that, not really noticed it? Do they like it or not like it? Any comments or questions?
I noticed it. I think it's easy. It's easier to follow, and I like it.
Yeah, what we're trying to do is anywhere with, anywhere in the platform where we had areas that were displaying similar type of information, we're trying to keep the correlation from, reading it left to right to be as close as possible, as long as the information is fairly the same. Obviously, so you're in one section or the other, you're not trying to disseminate the information, just because it's, on the far left or the far right. So, we're trying to make those adjustments here, and we do have an email that's going to be coming out with, again, some other information, but some very relevant and what we find to be very useful information for the earnings trades as well. So anybody else besides sit here? And it's okay. I don't feel bad if you haven't seen it or noticed it. And if you haven't noticed it, that's good. That means that you're using it and it wasn't a huge change to your way of thinking. So, yeah, these come out. Just make sure we're checking these. We do still have the confirmed AMC, BMO, the estimated. We did put on here the time of the entry. So if you're getting into a bullish pre-runner, you're going to get into it shortly after the opening. If it's a vol crush or like a non-mover trade, I'll show you in a second. The time of entry will be, prior to the close. If I go back to yesterday, we had Johnson & Johnson down below for the afternoon trade. So you can see J&J was a volatility crush trade, but prior to the close, entry was yesterday, and then it gives you the strikes and everything the like. I did want to go over those strikes because I think I misspoke to sit here in an email as well. So you can see these strikes for this vol crush trade. The market was around 167.50. So what we've talked about when we've talked about doing these trades is if the expected move on the 167.50, if the expected move prior to earnings is, let's say, $5, then you would want to buy the 162.50 put for protection. And then you'd also want to buy the 172.50 call for protection. And that would give you that, $5 on each side expected move. You can see for this trade here on Johnson & Johnson, the buy side is 175. So it's another $2.50 for a strike above. So what that is you would want the trade design to be set up as a balance. So if you're using $5 risk on the upside, you would want to use the same $5 risk to the downside. When the back test is run in the platform, when we ran this back test originally in the platform, that screener that we use to run the back test to input these trades, it uses the expected move. So you're basically buying a strike. Well, actually, let me look because I misspoke when I talked to Sid here about it. So give me 1 second. I'm actually going to pull up the exact trade. So in those shared, I'm just going back. I have the shared files that Josh sent out saved. So let me pull it up real quick. This is so what we want to look at is it's going to use the percentage from the current close above 1, and then it's going to use the expected move, 1 strike above the expected move, and then 1 strike below the expected move to the downside. So that could be, depending on how the strikes are set up, that could push us to the next available strike, which is going to be, or which could be unbalanced if you're looking at the call side or the put side. So I wanted to make note of that because Sudhir did mention that yesterday, and I noticed that as well. And I'm working with the IT team to see if we can somehow get that corrected to where, the back test is the back test and it's using the expected move. It's just if the 1 strike is a penny off, it's going to push you right down to the next strike. Or in this case, it's going to push you right up to the next strike of that 175. Sorry, let me show you. So it's going to push you right up to that 175 on that one. So Sudhir mentioned that when I sent Sudhir an email back yesterday, I think Sudhir, I said standard deviation. And when I thought about it this morning, I was like, okay, that's wrong. So I wanted to make sure and clarify that as well. Any questions on that? Anybody?
I did notice one other thing that is unrelated to the Johnson & Johnson. If you go back to today, with the time machine, it's the second time it's happened that, and I forgot the first one, but today, I have my Excel file that I'm tracking it on, and the pre-alert missed a trade. And so I wasn't sure what to make of it. There's a trade in the earnings plan for match today. It's a vol rise. If you go to the earnings plan,
Mm-hmm.
and this has happened twice. If it doesn't show up on the pre-alert, I don't trade it.
Right.
Because I don't know why it didn't. No, I mean, if you go to the earnings
The
plan,
actual plan, yeah, I was looking at that too to see what we did there.
I just put in MTCH.
Mm-hmm.
See, that has that's today, and
Right.
it wasn't in the pre-alert. And that would be, that's not an afternoon trade, right? Vol rise.
Right. No, that would be that would be a, yeah, I mean, because you even have a volatility rise trade here for lows.
Right. And I noticed that that happened one other time, but I forgot to alert you. And I don't know why it didn't. And so when it doesn't appear in the pre-alert, my policy is I don't trade it because
Right.
there's there might have been something in the database that changed.
Right.
Just FYI, I don't know if there was a reason it didn't appear in the pre-alert or what.
Yeah, yeah, that's fair. I still want the trade to show up for sure. So thank you for that. And yeah, I know before we had an issue with the volatility rise, not showing up either on here or even on the actual daily alert at the end of the day. So, I assume that was fixed because I'm like you. I typically look here to do my trades personally and some of the ones that I'm tracking as well. And then typically when I find one like that match, I usually find it, a day too late and I'm like, oh, okay. So that's fair, but I'll talk to them about that today. So thanks, Sudhir. Anybody? So, I know Sudhir and I are trading the trade like Johnson & Johnson last night. Anybody else doing any trades like that they would like to speak of, or any issues or concerns that they have, questions? Anybody tracking them in the virtual portfolios? Is anybody tired of me talking about them? Is that the reason we're not trading them?
I'm trading and tracking. I'm waiting for everybody else.
All right, well, cool deal. That's okay. Again, I mean, I talk about them a lot, so obviously you guys feel free to just shoot me a private email if you're tired of me talking about them. I don't mind. Or if I need to, disseminate some more information about them, maybe explain the trades a little bit better, or, I can go through a back test on one of these calls if that would make somebody more comfortable as well with the trades. Whatever the hiccup might be, please feel free to email me and, I can get on that and try to resolve some of those issues that might be sitting there. Can't resolve them all. And if you're obviously not comfortable trading them, then I completely understand that as well. That's not a problem either. So, was somebody gonna say something? I'm sorry.
Hey, Shawn, I don't know about anybody else, but I've certainly slowed down on any of my trades for the last 2-3 weeks. And just because I'm nervous about the market, and the trades that I have just are not moving.
Right.
They're staying, maybe they pop above break even a little bit, but they're under break even generally. And if I could get out of all of them at a profit, I would. I'm just hanging in there trying to not take losses. So I don't know if other people are as unsettled as I am about the market. And maybe that's why they're not speaking up, but I don't think it's anything negative you're doing.
Oh, yeah.
No.
I am curious about Sudhir, if you're trading and tracking, is the success rate what you would have experienced a year ago, or is it a little slower, or is it?
It's a little slower right now.
Yeah, definitely.
It's definitely slower, but the there haven't, we're in the very beginning of the earnings season, so there haven't been that many trades.
Oh, no.
And also, like I think there's been over 20 that were estimated earnings. I don't trade those, right? So the ones that were confirmed earnings and actually closed have been a little slower than previously. But I think, as we get into more of the earnings, I'll have a better idea.
Okay, thanks. I'd be interested, just out of curiosity, what you're seeing as a success rate on your trades. So anyway, okay, thank you.
Lee, I agree. You know what? It seems like this happened in the last earnings period too. It started off really well, and I was closing trades with a profit, and then all of a sudden everything stalls. And then that's what we're in right now. Same thing.
Yeah, and that happened to me back in January, February, also late January.
The other thing to keep in mind is that most trades are bullish, right? A bullish pre-runner or that sort of thing. Right now, at the beginning of the earnings season, most trades are bullish, and the market has been dropping. If you looked at the number of stocks that were in state 8 to state 6, that has been rising. The market is becoming narrower and narrower, and Josh talked about that. Most of the stocks have been dropping, but some very few big stocks, mainly the FANG stocks and Microsoft, have kept the indexes going up. And so because the breadth has fallen off of the market, bullish trades are going to have a harder time working.
Okay.
Sudhir, this is Joe. I think, a lot of good comments here. And one thing that Josh, Shawn, and I promised going forward, these guys have been working on the functionality of the platform for years. We're now in the process of trying to get it to actually be a better user experience. But once we get through this minutia, we want to get into deep analysis of the health of the market. Josh and Shawn do a wonderful job talking about it in the market overview. I suspect in the months ahead, we'll have additional tools to pinpoint things. So I just want to mention that just because, and it does sort of get back to this whole idea of delta of the portfolio. And, if the market's going up, we're not going to have a lot of bearish trades. So I promise we will be, doing more research in that area, hoping to be able to give us all, maybe some stronger results, in the quarters ahead. That's all.
Yeah, and I think your market pulse data is very valuable. And just one other data point, I mentioned it last week as well. You go to your pie chart on your dashboard, and I track that every day, right? And it peaked on June 11th at 71.7%. I'm talking about the green portion. That peak, if you went on your time machine to June 11th, it was 71.7%. And today, it's at the bottom at 28.4, right? That is an extreme drop in 30 some days of the breadth of the market. And the indexes have not dropped that much, right? So it's the big stocks are holding up the indexes, but the earnings plan is over large numbers of stocks. And if the large numbers of stocks at the beginning of earnings season are generally going down, then you're going to have, just okay results with earnings plans, right? Because that's what's been happening in the market.
And potentially, and of course, we all hope it's the case that if people are kind of flatlining with their positions, maybe down slightly, as you say, the depth of that drop in market breadth over the last 30 days, if we're only down a little bit in our bullish trades, that's a silver lining for the recommended trades, I think. And, you brought this up, as you said last week, Sudhir, and, to Josh's point earlier, we're very hopeful that Ashok will join next week. And this is one of the points that we want him to speak to, either a flat to rising market with a rather dramatically changing market pulse. So,
yeah, so what I'm hoping is that the market, people see that these, the large number of stocks have dropped, many of them for no reason. Some stocks who pay dividends, their yields are getting up into the 4% range. And I hope that the big guys start rotating from the technology into the broader market. And of course, as earnings start, if they rotate it into the broader market and for stocks that are having good earnings, then the earnings plan should do well. You follow what I'm saying?
100%. And Bob had spoke last week about, it would be healthy for the markets for that 10 to 15% correction. Josh has talked for ages about, kind of the sideways move of the Russell, which started in February. I frankly thought a month ago that thing was going to break out over the 2360 level. It didn't. It pulled back again. And Bob, as I went in and did some homework before the call, as it turns out, the one index, that has pulled back 10% is the Russell. And I think you were talking about the peak level for state ones, Sudhir. I don't know if you said June 25th, but I have the most recent high of the Russell on June 25th. And from that point till the other day, we did a 10-point pullback. I'm talking about, intraday high to intraday low, 10%. The other three indexes, remarkably, in my mind, SPS, NASDAQ, and Dow, all retraced 3.7%, which I don't think I've ever seen. And, that was in 2 to 4 days where, it took a month for the NDX to pull back. Looking at the markets today, RUT is up big again. It'll be the second big candle, assuming we close, to the upside significantly. It'll be the second big green candle, I think, since early March in the RUT. So, back to the fundamentals, Sudhir, and the earnings start to come in. If they're better, maybe this market correction in the broad market that started in February for the RUT, maybe, we'll get past that, but, barring COVID and everything else, but just a few insights.
Yeah, this is Dave. I'd like to kind of comment back on what Sudhir was saying too, about most trades, and it's like, okay, we're talking about Delphian traders here, or this group traders, or what we're looking at, or the general universe of traders. He made a comment that most trades are bullish because, and why is that? That's because markets generally over the longest period of whatever you're looking at tend to go up, right? For all the reasons of capitalism. But
I'm not sure.
Dave, let me just finish that. I'm having trouble organizing the completion of this thought. But if the markets aren't going up, they're more range bound, and I think there's less just overall experience over the universe of all traders having any strategic plans or ideas on how to trade sideways markets. There's two basic things to look at, and that's if volatility is really high and falling, like around earnings, then iron condors and iron butterflies are selling something, or two sides of something seems to be an advantageous way to go. But if it's not that, and volatility is lower or mid-range and not expected to move either way, how do you trade that? Well, time spreads are one way to do it, but that's a more complicated trade, and I think less experience with that kind of a strategy over all of the people that do all kinds of options trading. So it would be interesting to your friend or advisor there, what he thinks about trading in sideways markets. I think that would be, everybody would want to listen to that. I'm very interested in listening to hear what he says. But back to if you're not bullish on a trade and you're trading, the most common trade I think that people do around earnings is the earnings trade, right? So you're looking at volatility and volatility crush, and the thing is, you just described, made the statement a minute ago that the ranges seem to be tightening. Well, the market makers know that too, and they're tightening their ranges, and the amount of premium and the implied volatility around earnings. It's getting, I think, lesser and lesser over the last 2 or 3 quarters. So it's harder to make that trade because you're not given as much leeway. And the stocks that seem to be outperforming are the ones that are really, really high priced, because the market makers don't want to go too far out in their broadening of the implied volatility. So, it's easier to stay within their ranges. They don't want to be wrong, so they err to the wider ranges than probably is going to be expected. So if you were to look at how many of the vol crush trades are working out, I'm almost betting that the really high price stocks are turning out better than the, let's say, $50 to $100 range stocks. Just guessing on that. I don't know whether that's helpful or makes confusing, or sorry for if I confused anybody, I apologize. And somebody could just text me and say, Dave, you're out of line here, just be quiet. I accept criticism for thoughts that are out of bounds. Sorry.
Actually, Dave, coming out of that, I would ask, so Josh and Shawn have been here, almost 5 years, 4 or 5 years. Guys, in that time period, it's essentially been a bull market with a couple corrections. Obviously, the bias to the market is to go up. But in terms of the balance of recommended trades from Delphian, and any ballpark percentage as to, how many are bullish and how many are bearish? I mean, since I started in December, clearly the vast majority are bullish trades, but is that percentage much different going back the last 4 or 5 years?
No, I think most of the recommendations, if you look at all the earnings plan plus studies and alerts we've done manually, I mean, they're bullish trades. I think the only bearish trade is the bearish pre-runner and the bearish runner in the earnings plan. And then there's the neutral ones like vol rise, vol crush. But I would say, if you added them all up, you're still looking at 70% bullish trades, right?
Yeah, no, I would agree with that, because it's definitely, Josh and I, when we were in the office, and Josh can speak for himself as well, obviously, but when we were in the office together, that's kind of what we did when I first started, is we're just trying to figure out ways to not only have bullish trades and run back test on that, but then also on some bearish ones as well. But the majority of the bearish trades that we would back test just didn't work, and I think Josh had mentioned it before, to the fact that, barring some of those years where it is just a big down market, a lot of the times, you get what happened on, Friday's close and Monday's open, is you get that big down push in the market over a short period of time. And then, if you're not already poised to kind of catch that move and get out on the open, you're pretty much going to miss it, because the, IWM's up, 5% since Monday's open, So it's very difficult to time those types of trades with some of the back tests that we found. Now, I think with some of this intraday data that we're looking to get over the next couple months or the next quarter, we might be able to improve some of those back tests a little bit better, because you can get in and out intraday a lot easier on the back test, right? I can't guarantee that's going to be the case, but that's a possibility.
Yeah, I agree. We tried a lot, and we found nothing worthy of like a study. Some were reasonable, but nothing good enough, over a systematic strategy, for bearish trades. So we don't have any studies that are bearish, or we haven't developed any. I don't think we really tried for any kind of sideways, but that's something we can look at doing. I think initially the next thing we'll do is for the indexes, put some studies for the indexes eventually here. But yeah, most of the trades are bullish. Sudhir said everything correctly. The only bearish ones are earnings, and you can always go in and try and find them like in state transitions. You know, you can look for bearish trades there too, and test them. So that's the only other way, you know, in those screeners, to go find them yourself. So.
And then, you know, and then some of those studies that we have, you know, that's kind of where our bullish trades come out, you know, because sometimes if I do a test, and I think I've shown this before, if I run a test on the bearish side and I, you know, and it comes back to where it only wins, you know, 10% of the time, then I have to kind of think of the opposite, right? Well, okay, maybe the trade, you know, design is to catch the market moving down, but maybe the trade that I need to build around that is actually going to be a bullish trade. So then you take that and you say, all right, well, let me just flip it. And then you test that. And then you're like, well, wow, okay, a trade that I thought should make money being a bearish trade with puts is actually a bearish trade, but winners when you're trading calls. I don't know if that makes sense, but that's kind of how the analysis that I had to put for some of the back tests that we did. So
what I would say, that just kind of the final thought on this is, I'm hoping for in the next couple of weeks, we have a rotation and we have a rally in the IWM and the S&P mid caps, because that's where all of the earnings trades really are, right?
right.
I mean, you have some on the biggest stocks, but you know, right now the market has been, the indexes have risen and stabilized because of these really big stocks. And I'm hoping that that the big guys start rotating into mid caps and IWM stocks. We get a rally in that area, and the earnings plan, I think, will work fantastic.
Hey, Josh.
Yep. Hey, Bob.
It's Bob. 2 weeks ago, you showed a strategy that you had developed that was, I don't remember, I never understood it well enough to repeat it, but it's the one that when you first started showing it had all those simultaneous trades. And then when you whittled it down to little or no simultaneous trades, it looked like it had a lot of promise. And I think I remember you're saying you were going to pursue that a bit. Did anything come out of it?
Yeah, I haven't had a chance to, I was on vacation last week. So I haven't gotten back to that, but yeah, I will do some further analysis on that strategy. That's the one that Lee had talked about. You know, as far as, I think it's yeah, like a 5-day drop. It's kind of like a little variation on the one that we had built for the indexes. So he changed the percentages, and so yeah, I'll have to do some further analysis on that. So I haven't.
Yeah, I stole my ideas from Shawn.
That's okay. That's all right. As long as we're trading like those indexes and stuff, I don't think we're going to put a dent in the open interest of the volume. So I hope we all can make money doing it. So.
Yeah, that IWM did, I think popped on Monday, I think, so.
Right. Yeah, it was down big on the futures, and then right on the open, it just dropped a bit, but then came back, and it's still running pretty strong. So, yeah. All right. Well, cool. Well, yeah, that's good. I enjoy it when we all get to talk and provide different information. And I think to some points here, and you know, this is just my personal opinion, you know, when we're talking about some of these bullish pre-runners and these trades, right, you have almost a sector like we've had the banks kind of, you know, their earnings are coming out at the same time. So, you know, if JP Morgan and Goldman Sachs and Morgan Stanley, if they're all bullish pre-runners, you're putting them on pretty much almost not at the same time, but at a pretty similar time, or at least I'm in those positions almost at the same time across the board. So if one does fairly well, but then the forecast is kind of mediocre, and then it starts to fall, it almost seems like something, you know, barring something crazy happening, they're all kind of falling. So I don't know of a way yet. I haven't figured out a way to maybe minimize that. Maybe it's only being in, you know, one symbol per sector. on the earnings trades just based on what's going on. But, I think all of those bullish pre-runners that I had personally, have lost money or are down money. I took a loss on the trade, and they're all in that same sector. So I don't know if that's a little, it's a little more analysis that I need to look at myself, but that's just something I thought about when we were talking about that. Also I did want to mention, we're looking at the earnings trades and we're talking about, the studies, but those studies that Josh did and the tracking that he's doing on, these high probability trades, a lot of these have been populating lately, obviously with the market pulling back like it did, I think last Friday or Thursday, and then, Monday it was up, but still down a little bit. So some of these trades that have a really little amount of occurrences, for the first part of the year, have some more trades coming into them. So, keep a look at these. These have some really good trades, and I've noticed, if I had some of these trades on personally last week, and even with a little bit of a pullback, obviously I'm down money on the trades, and this is a big factor, like Joe mentions, about the delta of your position on your bull call spread versus your long call. I might have been down a little bit of money on this pullback, but I was able to get out of some of these trades yesterday and even today, at that 25% profit on these bull call spreads. So, these are some trades that you still want to kind of look at. Josh has done a lot of legwork on running this analysis, and I have these highlighted just for my personal use, right? The green's above 25% profit. The yellow is just obviously below 25%. But when you're talking about 100% win rate, only 11 trades or 12 trades, but there's more in there now. But still, 100%, 93%, 87%, 95%, and even more on your bull puts. I mean, these are still some really great trades to be looking at. Not only do these trades have a lot of time on them, you can kind of withstand some of these pullbacks like we had the other day. But they're showing some pretty good returns. And agreed, some of them are pretty expensive. I think Caterpillar had a trade yesterday, bull call spread with the way it's set up. I mean, the trade itself was like $2,000. So an expensive trade to be putting on, no doubt, but that doesn't take away, I think, the probability or the profitability of the trade, right? But obviously, if your limit's $500, don't put a $2,000 trade on just because it's a 93% winner. I've experienced that to where that's probably going to be the one loser for me. So, don't make that mistake, and make sure you're staying within your, personal requirements, right? Is everybody okay with me showing you that screener for a couple minutes, Joe, Josh? I just want to show that screener real quick, and then
Sure.
Joe, did you have something you wanted to briefly talk about, or was that something we went over just a second ago?
Yeah, I think we covered it already, Shawn.
Oh, okay. All right, cool.
You're clear.
Yep, cool. So I just want to show you guys real quick. I was going to show something else, but now I'm kind of backtracking a little bit. Give me 1 second. All right. So we talked about, a couple companies taking up a big portion, of the market movement to the upside right now. So when Josh was talking about that earlier, I just wanted to look at it myself real quick and see if it would be any value. So I'll just kind of show you what I did. And this is just something that you might know or you might not know. If you come into our ETF section here, you can click on ETF overview. And what I did was I typed in SPY, S-P-Y. And then it shows you the SPY, it shows you the holdings and things like that. But you can click on holdings here and get all of the holdings within the SPY, that the most recent that we have access to. You can add, we can obviously see the weighting percentages within that particular ETF, but you can add all of these symbols, 503 symbols. You can add them to a stock list right here. So you can say stock list name, SPY, ETF. I might put a date here, 07/21/2021, just so I can know the date. I'm going to cancel it because I've already saved it. But if you hit save, it'll save it. And then once it's saved, you can actually go into your organizer under stock lists. And I did it twice, so you'll see it here twice. But you can see SPY, ETF, SPY, same thing. If you hit SPY ETF, it's going to show you all the symbols that show up within that stock list for me. So once it loads, it should show, 500 and change. So 500, or there's 4,000 down below what it's looking for, but 481 is what it's pulling out for that ETF. So what I did from there was you can actually go into stocks and then you can go into your screener. So now that I've constructed my stock list that I want to analyze, I can go into my custom screener and then I can basically analyze all of those stocks at one particular time. What I did a second ago is I went to state modeling. I went to state model. Current is going to be in state 1. And I'm going to change my stock list to that ETF. And if I hit find stocks, it's going to pull up out of those, I think it said 483, 485 or so. There's 188 of those stocks that are currently in state 1. So, you know, a little more than what, maybe a third or so. So a third of those stocks are in state 1. And then we can do further analysis. You could do further analysis, see if which of these stocks have hit their target, which stocks have hit their, you know, target 1, or which are above their target 3. So there's a lot of other analysis you can do on these different symbols. You know, not only the fact if they're in state 1, but you can add multiple filters on there as well. So, you know, you can do that with the SPY, you can do it with IWM, you can do it with the Qs, whatever other ETFs that you want to construct or other stock lists you want to construct yourself, you can do that and just run this analysis on there and see. So, you know, it's a great way to kind of look at some different factors. You know, so here I mentioned maybe for the for the IWM or one of those markets to possibly make a little bit of a rally, you know, over the next couple months, that might be something to look at. You could look at that IWM, look at the components, see which stocks are in state 2, and then maybe look at maybe running a bullish strategy on some of those stocks, or stocks that haven't hit their target 1 yet in state 1, you know, whatever. I mean, pretty much I think if you can think about it, it's probably within the platform for you to be able to test and check out. So just wanted to show you guys that real quick. Anybody have any questions on, you know, using this, creating a stock list or using the screeners, anything like that?
Hey, Shawn, can you export that when you created that stock list? When you went into the overview?
Let's see. Let's see. We've added some of those and we've taken some of those out. So let me just go in there and see. So I go into organizer, stock list. If I open up, let's just say this one. I don't know why that's stuck in there, but that looks like that might be the. So that generated it. So that should not be obviously inside the search button, but that was a PDF icon. Let me see if I can. Yeah, that messed up worse. Sorry. So yeah, it pulls it up as a PDF here. So these should be a list of those symbols that we were looking at that are, you know, in that particular ETF. You know, obviously, if you have a converter to where you can convert a PDF to an Excel file, then you should be able to convert that directly over to an Excel. But you know, to convert it to Excel, we don't have that functionality right there.
So you can't export it to Excel then?
You can export it to Excel, but I know they do have like I don't know if it's free, but I know there is a PDF to Excel converter. I don't have it, so maybe it's not free.
There's a website called PDF to Excel that I use all the time.
That's right.
It's
I remember
free if you use it occasionally, and it's not perfect the way it converts columns, but it does, you know, 90% of the job. And you know, you only pay if like you're doing more than a certain number of conversions per month or something.
Per month, right? Okay, so that would be something to use, yeah. That PDF to Excel converter that they have online, and that would just you'd be able to convert this form here into an Excel file. As far as this, once you actually screen out a certain number of the stocks, now you can always screen. So if I screened out, you know, there's 188 symbols left that are in state 1. Now I can add to this. So I can basically say add to stock list, and I can create a new stock list from the list that I just created. So I could say, you know, SPY ETF state 1s, right? And then I would put a date there just so I knew that I did it on today's date. If I hit save, it's created. So then if I go back into my screen, my organizer, stock lists, now I should have that stock list here, which is SPY ETF state ones. If I click on that, then we're talking about 188 items. So now this is the new stock list with all of those symbols that are in the SPY that are currently in state one. And then I could generate the PDF from there as well and do, like Sudhir mentioned, transfer it over to an Excel if you want to do that. So a little bit of steps involved. We're not going to make it like, super easy where you can take the data and kind of run with it somewhere else. But the point is that there is a lot of functionality in here. And, again, like we talked about before, practice makes perfect. So use it. And, if you have questions, other people probably have questions as well, let us know so we can address it and, help you become more, proficient, efficient with the platform. But this is really cool because you could do, you could take these from here, type in an analysis to find the grade, the Delphian grade, and then you could pull out all the Delphian grade A's. And there's so many different cool things you could do if you knew kind of what you're looking for to whittle down some information and try to find some good symbols to invest in. So cool. Yeah. And then the other thing too, real quick, I don't know how to ease a lot of the tension or the fear that's in the market trading wise. If you're concerned for a reason, and that might be a good reason not to trade. I really like the non-movers and the volatility crush trades because typically they are a pretty quick type trade. You do have exposure obviously to the market if it does take a big move, one night, to the next morning, but typically those run pretty well in my experience, and you're in and out most of those pretty quickly. So I do like those trades personally. So just my 2 cents, but that's all I had, guys. Any questions for me on this?
How have you been as far as getting out?
Mine haven't been too bad. I haven't had, like we talked about last time, getting out of those non-movers on Thursday before the expiration is key. So you don't get involved in the exercise or, some problems such as that. I definitely still pay attention to the legs that I'm buying. So for like Johnson & Johnson, like we talked about on this, let me go to show you the pre-alert real quick. Options, pre-alert. I definitely make sure, so what I want to look at is, I'm selling the 167.50s. This one's, $5, let's say. So it's not too far away from the market, but some of those other ones that might be $25 or $30 away for the expected move. I definitely want to make sure that this option, these options that I'm buying, have a decent amount of open interest or volume in them, because if they don't, then that might just cause a problem for me in the end, right? But we've tried to, we've combed this list a couple times between Joe, Josh, and myself. So we've tried to pull out all the symbols that could potentially cause a problem. Doesn't mean that there's going to be some in there, depending on the timing of the trade and what's the action in that particular option expiration at that time. But yeah, I always want to check my open interest and my, my volume. The worst thing that I've experienced, trading commodities and even trading recently is that, I have a great idea. I get into a position, everything looks awesome. The stock goes up or goes down, whatever way I want it to go. And then I try to cover my trade and I can't do it because there's nobody out there on the other side of the market that wants to take that side. So that's the worst thing ever. Or if they, I should be up 50% on my option, but there's really only 2 other people out there that want the other side of the trade. So they're really only going to, they're going to make me work it all the way down to 20% profit, something like that. Those are just the worst scenarios and they happen. So, those scenarios happen if that volume and open interest is low. You're not guaranteed an exit by any means. So just make sure that's there. I haven't had a problem on these. I mean, like a Johnson & Johnson or a Tesla or an Apple or Facebook, they have a decent amount of volume. So not much concern there. But some of your other ones, you're just going to want to check them. Sudhir, have you had any issues getting out? Not to put you on the spot.
No, I haven't had that issue. I did a couple of earnings plans ago. I did get assigned one,
Right.
because I waited till the expiration Friday, which is a mistake, you know, like you said, you can't make, right?
Right.
But other than that, I don't have trouble getting out. And the J&J thing worked. This was a successful trade. It closed today.
Yeah, you should be out. I was out earlier as well, so you should have been out. We did different strikes. You know, sit here, did it. He was looking at this right here, and I didn't see this, and I just did it kind of where the market was at that. It was right in the middle of 167.50. I think it was at 168.50 or 168.75. Either way, I did the 170s versus this one, but like I said, I didn't see this. I was out as well today also. But, you know, those have some decent volume, right? If you're looking at the Johnson & Johnson, I have it up now on another screen, you know, those options have, you know, well over the thousands in open interest for some of these strikes. So, you know, that's typically shouldn't be a problem when you're getting, you know, out of those particular trades. So yeah, that's all I had, guys. I mean, I appreciate you listening, taking the time again. Good conversation earlier also. So, you know, that's all I had, Josh.
Yep. All right. Thanks, Alan. I guess we ran a little over this week, but, you know, just a reminder for next week, yeah, we should have the Shook on here. So, please tune in. But, you know, thank you all for coming.